Americans are losing faith in the economy, and it's not just about inflation anymore. Consumer confidence has plummeted to its lowest point since April, as job security worries take center stage. But here's where it gets controversial. While inflation remains a concern, it's the growing uncertainty about employment that's truly rattling households. Could this be the tipping point that forces policymakers to rethink their strategies? Let's dive in. A hiring sign hangs in a Manhattan storefront window, a stark contrast to the grim sentiment reflected in the latest Conference Board survey released Tuesday. The Consumer Confidence Index nosedived to 88.7 in November, a 6.8-point drop from October and far below the 93.2 economists had predicted. This isn't just a blip, it's the lowest reading in 7 months. Adding to the gloom, the expectations index fell sharply to 63.2, while the present situation index dipped to 126.9, signaling widespread unease about both the current and future economic landscape. And this is the part most people miss. It's not just about finding a job, it's about keeping one. Dana Peterson, the Conference Board's chief economist, noted that consumers are particularly pessimistic about business conditions in the coming months. Expectations for the labor market remain bleak, and hopes for higher household incomes have all but vanished after 6 months of optimism. A key metric within the report, job expectations, has deteriorated significantly, painting a picture of a workforce on edge. The numbers are striking. Only 6% of workers now describe jobs as plentiful, down from 28.6% in October. This reflects the no hire, no fire stagnation seen in other economic indicators. Meanwhile, 17.9% of respondents said jobs were hard to get, a slight dip but still a concerning figure. These findings align with ADP's report on the same day, which revealed private companies shed an average of 13,500 jobs over the past 4 weeks. It's a double whammy of bad news for workers. Other surveys, like the University of Michigan's Sentiment Gauge, tell a similar story. It dropped 4.9% in November compared to October and a staggering 29% year-over-year. This weakening sentiment coincides with Federal Reserve officials hinting at further interest rate cuts, with traders betting on a quarter-point reduction in December. But will it be enough to restore confidence? Here's where opinions start to clash. While inflation remains a top concern, with respondents expecting a 4.8% rate next year, well above the Fed's 2% target, the labor market is emerging as the new wildcard. Peterson highlighted that pessimism spans income and political groups, with consumers citing prices, tariffs, politics, and the recent government shutdown as major stressors. Yet, the labor market stands out as a persistent worry, even as mentions of it ease slightly. Interestingly, despite the gloom, respondents expressed strongly positive expectations for the stock market in the coming year. Is this optimism misplaced, or could it signal a disconnect between Wall Street and Main Street? That's a question worth debating. The recent government shutdown hasn't helped matters, delaying critical economic data and leaving policymakers and analysts in the dark. As agencies resume operations, the trickle of outdated reports does little to clarify the current state of affairs. This raises another contentious point. How much can we trust economic forecasts when the data itself is delayed or incomplete? So, what do you think? Is the focus on inflation overshadowing the real crisis in the job market? Or is this just a temporary dip before the economy rebounds? Share your thoughts in the comments. Let's spark a conversation that could shape how we understand this economic moment.